Right now, there are a lot of booming sectors in the market, but today we're going to revisit another low-cost play in one of the fastest growing sectors. Hi, I'm Matthew Carr, Chief Trend Strategist for the Oxford Club. Thank you for watching this episode of Market Trends. So, electric vehicles, or EVs, are currently in what we call the early adopter phase. Even though shares of Tesla, NIO, Li, and others have catapulted to these meteoric heights. Now, here, back on August 21st, I talked about EVs and E.M. Rogers' diffusion of innovation theory. This is always one of my favorite graphs to turn to because it illustrates just how much potential a piece of tech still has to run. As I said then, EVs are currently in this early adopter phase, but by 2027, projections are for the global EV market to top $1.2 trillion. And by 2028, EVs are projected to capture 16% of the global automotive market. That means they will cross the chasm and move into the mainstream from that early adopter phase. That's a big move, and that's when you're going to see a lot of their businesses really begin to take off. Now, when I covered this topic in August, I highlighted the company Blink Charging as one of my favorite plays for this coming trend. Since then, shares have torched the NASDAQ, gaining more than 615%. But as we know, there are a number of ways to play this boom, and today I'm going to share one I think has a lot of potential upside, plus it trades for less than $8. Now, I always love to target emerging tech companies in that $5 to $15 range, so this hits right in that sweet spot. Electromechanical Vehicles is an EV maker forging its own path. The company likes to point out that 119 million people in North America commute to work each day in personal vehicles, and the vast majority of them, 105 million, do so alone. Now, this is an opportunity not only to rock out to the entirety of Led Zeppelin's T for One or listen to Lauren's Sega Sunset without passengers complaining.
Have fun, kids! I'll just be here listening to my tunes.
But to also rethink about how we commute and the vehicles we're purchasing for that purpose. So to this end, Electromechanical manufactures single-seat EVs. The company's flagship Solo can travel 100 miles at a top speed of 80 miles per hour, and it takes 2.5 hours to fully charge. So this isn't like ludicrous speed on a Tesla. But over the next several years, the demand for this type of vehicle is projected to skyrocket because the primary fuel for this market is substance over style. And Electromechanical Solo comes in at a far more attractive price point, a mere $18,500. That's considerably less than most other EVs, which start between $30,000 and $50,000. Now, with Solos hitting the road this year, the company has 13 locations across Arizona, California, and Oregon, and it can currently produce more than 20,000 vehicles per year. But that's not all. Electromechanical is also rolling out a two-seater sports car EV, Tofino, as well as the e-Roadster, which has this old school design that to me is kind of reminiscent of like a Porsche 356. Now, these are going after a much different audience. So the Tofino is expected to retail for around $50,000, with the e-Roadster closer to $125,000. But with Solos hitting showrooms, we're about to see this major change in fortunes for Electromechanical. Revenue in 2021 is projected to increase 2,878% to $14.89 million, as its loss per share declines to around 40 cents. So that's a big improvement over last year. But here's the deal. Targeting low-cost, high-growth stocks is one of my favorite investment approaches. And I believe Electromechanical offers another great opportunity to score big on a low-cost stock with a lot of upside on the horizon. Well, I'm Matthew Carr, Chief Trend Strategist for the Oxford Club. Thank you for watching this episode of Market Trends. For more information like this, be sure to go down to the description and sign up for my free e-letter. Until next time, here's to high returns.